I guess we'll go ahead and get started. So welcome to today's webinar, Credit as an Antidote to the Rising Rate Environment. Before I hand it over to our Vice President of Marketing, Mike Darn, I wanted to share some administrative items with you. All participants will be muted for the duration of the webinar. As a participant, you have a couple of ways to post your questions or chat with us. At the bottom of the screen, you'll see a ribbon with two specific options, one for Q&A, one for the chat. Please use the chat if you have it, or if you're having any technical issues and need to reach the host. And then please use the Q&A feature to post questions about the content of the webinar. We'll be keeping an eye on the questions and we'll try to answer them as they're asked. If there are any questions that we're not able to answer or are better handled offline, we'll reach out to you separately after the webinar. Now let's go ahead and start the program. Credit Expert was founded 20 years ago with a vision of helping to make the dream of home ownership accessible and affordable for everyone. My name is Chase Arvanites, and I want to welcome you to the Credit as an Antidote for the Rising Rate Environment webinar. I am joined today by Mike Darn, the VP of Marketing at Credit Expert. Without further delay, we'll jump in.
Hey, thanks so much, Chase, and thanks for taking your time, everyone, to join us today. Obviously, with rates kind of going through the roof, doubling since last year, we thought this would be a great opportunity to share a little bit about what we're seeing in the market and how you might be able to counter some of the rising rates that we're seeing as you're working with applicants. So there's really no surprises here, right? It's just kind of stark and striking to see this, in that, you know, as I mentioned before, you know, a year ago, we were looking at rates down around 2.8%, and we're back, you know, well above 5% now, bumping up into the 6% range. And that's had some pretty serious impacts on the market. Obviously, the past couple of years, the market has been driven a lot by refi. But as you can see here with this data from Black Knight, which is not even up to date, you know, based upon some of the recent increases that we've seen, the number of refi eligible homes has dropped from 1.6 million probably just a couple of months ago to probably under 800,000 right now. And so that market is largely driving up. But as we move into a purchase market, you know, these rates are really starting to have an impact on what people can afford. And this was a graphic that I saw in the Post a couple of weeks ago that I thought was really striking and really made the case here that, you know, looking at somebody that was shopping for a $750,000 home back when rates were down around 3%, those rates are now up around 6%, and it's going to cost that home buyer or homeowner almost $400,000 more over the life of the loan. And when you think about it, this from an affordability and what homeowners are going to be shopping for, if you want to look at apples to apples, being able to afford, you know, the same amount of home with the same monthly payment, again, that person that may have been shopping for a $750,000 home last year is likely going to have to cut that budget pretty substantially. I mean, if you look at these numbers, kind of squint across it, you know, you're going from $750,000 home to maybe a $500,000 home if you're looking to keep that monthly payment even. So major changes, you know, for home buyers here. And my sense is lenders are struggling with this as well, as they're looking for ways to help their applicants get into the home that they're looking for. So, you know, one of the things that we do know, so last year, about this time, we conducted some research with those that had just gone through the mortgage process, whether that was a refi, you know, a purchase mortgage, or they were first-time buyers. And one of the things that we asked them was, you know, what is most important to you when you select a lender? And perhaps not surprisingly, the number one and the number two responses there were interest rate and monthly payment. They obviously are very close to each other. But, you know, again, so if you believe that a year later that these things are still important, this is perhaps even a time where things are even more important for applicants as rate has really become an issue here. So, the MBA is reporting out, a 46% drop in applications. We here at Credit Expert, as we look at inquiries or credit pulls that are coming through the door, we've seen about a 29% drop. So if you look at, and just to orient you on the slide here, what you're seeing on the vertical axis is the number of pulls that we see on a monthly basis. And then along the horizontal axis, you're seeing the credit bands by 20-point increments with which those are coming. And what you're seeing here is on the top in the gray line, what we saw just a little over a year ago, back in May of 2021. And then the pink line is showing where we are today. So you see overall, we've got about a 29% drop, but the big drops are happening in those upper bands. So if you take a look at that 780 to 799, pretty major drop there. That tells me that, again, refi market has probably dried up because you probably had a lot of people with those higher credit scores applying for refis. So we're seeing a drop, not as much as the applications. There's still interest there in the market. People are still testing the waters, at least as of May, but it's a pretty significant drop from where we were. So the question is there a common opportunity for lenders and applicants in this market? And we absolutely believe so. So, we know that credit scores, are that near-term thread that benefits both lenders and applicants. So if you're a lender and you're working with your applicants to help improve their credit score, you are likely going to be able to close more loans, especially in this environment. And then, if you're an applicant and you're working with your lender closely to improve that score, the big benefit there is you're going to lower that cost of home ownership and maybe even be able to get into a home that you did not think that you'd be able to get into. And the hope is that, they can start to claw back some of the gains that have happened over the past few months. So next thing I wanted to talk about is to kind of get into what opportunity people have to improve their credit scores. And so earlier this year, we released the first edition of what we call the Mortgage Credit Potential Index. And just a quick overview on what that is. So when I joined the company a bit over a year ago, I started looking at some of the data that we were seeing. So, last year alone, we analyzed nearly 24 million or over 24 million credit pulls. And when I was looking at the data and I was looking at the improvement potential across those bands, my initial inclination was that we would see a significant amount of improvement potential down on those lower bands, but that would trail off as you kind of moved up. But what I saw when I looked at the data was something quite different, in that it was very uniform across all of the bands in terms of the credit potential. And what we found was, as of May this year, 73% of all applicants that have initial credit scores that are 760 and below could improve that score by 20 points or more within a 30-day time frame. And so we created the Mortgage Credit Potential Index, where we report out and we show the volume that's coming through. So we believe that this is helpful for lenders to really strategically step back and look at where the opportunities are, but we also display what that opportunity is within each of the bands. And then we further contextualized things, as opposed to just having these big nerdy tables of statistics in there, to really kind of allow lenders to wrap their heads around this. So if you take what we're seeing in the data, and again, this is just our data. We have a representative sample of the entire market, but we only represent about 40 to 45% of the polls. So you can kind of do the math here in terms of what the broader opportunity would look like, but these percentages will hold across all of it. So what we saw was, in the 12 months ending May 31st of this year, 738,000 people that prior to having gone through, the Credit Expert system, would not have qualified for an FHA loan. 738,000 of those could qualify for an FHA or an RHA mortgage. Similar on the conventional mortgage, not where they need to be to qualify for it. 1.2 million of those could improve. But I think the big message here, and to cut to the chase at the bottom, where we find ourselves today, actually there are two of them. So the jumbo mortgage with rising home prices, 1.84 million or 40% of people below that cutoff for the jumbo mortgage could qualify. But then even more importantly, that box at the bottom that shows that those that qualify but are below 760, 5.64 million of those could qualify for a better rate based upon risk based pricing. So huge opportunity there. This is another way of kind of looking at this, and this shows where the credit inquiries are coming in. The pink line shows the percentage of those that can qualify within 30 days. And then that pink box really represents that opportunity of people that could increase their score and qualify for a lower rate. So what you're seeing here in this 72% and the 73% that we spoke of before was just the percentage of those that could get to at least 20 points of increase within a 30-day time frame. That could be higher if you took a longer time frame to work on certain issues in the credit file, but it can also be much higher than that 20%. So if you take somebody that comes in around 640, what you're seeing here is 74% of those within 30 days could increase their score by 20 points. 40% of those people could increase it by 40 points, 14 points, 14% by 60 points, and 5% of them could increase by 80 points. And then, another 2% could go even higher than that. And again, this is looking solely at that kind of 30-day time frame. Obviously, if you stretch that out, there's more that can be done in terms of bettering those scores. So that's fantastic, but what does this mean, right? So we ran, some numbers here. We looked at a $300,000 mortgage, 30-year fixed rate, and someone starting with a 640 credit score, and an APR of about 6.32%. As you can see here, as you improve by 20-point band, that APR starts to go down. And that's a good thing, because as that APR starts to go down, both the monthly payment and the lifetime savings really start to add up here. So if you take a look at that, someone that initially had come in at a 640, if they were able to increase their score by 80 points, that's going to mean $143 more in their pocket every month, and another almost $52,000 over the lifetime of that 30-year loan. So pretty compelling numbers, given where we've gone from an affordability perspective over the past several months. So how can you better serve your applicants and end up closing more loans? So I think step one is using Credit Assure, which is one of our products to identify the credit potential for every applicant. So the way you get to Credit Assure is that as you pull credit on an applicant, open up that PDF credit report, and you'll see something similar to what you're seeing here, where by credit bureau, it'll show you the potential for them. And the key is to do this with every applicant. We believe that this is important because it creates transparency between you and your applicant, and it shows them what the possibilities might be there. The other thing that we know is that a lot of applicants come into the application process with a good idea of what they think their credit score is. And oftentimes what we found in talking to lenders and talking to consumers is that those are the scores that are typically available. Those are the scores that are available through sites like Credit Karma, through retail banks, and those typically use the Vantage score. And so the models are going to be different. And so again, having someone come in, knowing what that score might be, they may have a sense of, my score is a lot higher than what you are in and what you're showing them after you pulled credit on them. But this provides you with a great opportunity to say, great, well, you're here, but there's an opportunity for you to get to, a much higher score, which will help reduce your payment over time and may help you qualify for a loan if that's the challenge they're facing. Step two would be, and we recommend again, using another credit expert product called Wayfinder, which takes that potential and shows the applicants what it will take to get there. So you decide, you and your applicant decide, hey, I want to look for ways to improve my score. You go in, you use Wayfinder. We will show you precisely the likelihood of you being able to reach that particular target score. It'll show you how much cash you'll need to use to be able to get there, the number of actions, as well as the time frame. And so you can do this across a bunch of different, or each of the 3 bureau scores to get to a point where your applicant can reach that target score. You could even push and say, look, I want to get to, an even higher score. We'll be able to show you the likelihood of getting to that higher score. And quite honestly, the tool is super easy to use. You're just clicking a couple of buttons, choosing a couple drop downs, and everything's done there for you. So you can then ship that plan off to the applicant and have them follow it, get back to you with the documentation, process a rescore if that's needed, or simply wait for the credit to refresh on the next month. So the third one, and this is really an if necessary. So we recommend using Wayfinder as the place to start because it's so easy. It gives you the likelihood of achieving a score. And it really takes very little training to be able to do it. We have another product called What If Simulator, where if you have a more challenging credit record or situation, or there's information that's not reported on the credit report, but your applicant has disclosed that to you, you can go into What If Simulator and run a bunch of different scenarios to see what would happen if you did this or that, reduced a balance, or removed a dispute. And as you can see here, you can go much farther out on the timeframes to model what that score could look like. So again, just going back, here, step one, make sure that you're popping open those credit reports, looking at Credit Assure to identify that credit potential. Number two, use Wayfinder on all applicants to show your applicants what it'll take to reach that target score. And then again, if necessary, pull out What If Simulator if you've got a situation that's a little bit more challenging. So that's all I have. I think, if you're interested in learning more, and I'm happy to take questions here as well. Everybody that signed up and showed up this afternoon, we're going to send you a copy of our latest Mortgage Credit Potential Index. You'll be getting that in the email later today. We also are setting up demo webinars. And the good news is the people doing those webinars will do a far better job than I did in explaining exactly how the product looks. It'll be a live webinar where we'll take you through the product, show you how to use it, answer questions. And then if you're ready to get started and you don't already use Credit Expert, or even if you do and you want to start using it more, we would be happy to have a one-on-one consult with one of our sales team members. And if that's of interest to you, just pop us an email at getstarted@creditexpert.com. So with that, Chase, should we look and see if there are any questions out there?
Yeah, let me look here. I don't see any that came through, but if you do have any questions that you want to ask after we get off here, you can always ask at getstarted@creditexpert.com. And we will get to them, I believe, today or tomorrow. Right after you'll get the Mortgage Credit Potential Index.
Awesome. And, as Chase said, please feel free to reach out if you have any other questions. We're happy to take you, through a live demo, connect you with the right people to get you started. So with that, we will conclude today's webinar.
Thanks, everyone.
Thanks for showing up.